How to buy your first home in Michigan. Are you thinking about buying your first home here in Michigan? Maybe you're not sure where to get started. Well, go ahead and take a deep breath, because after you've watched this video, you're basically gonna be a pro. There may even be some top secrets that could save you thousands of dollars on your new home purchase. But before I give away the secret sauce, I need one little thing from you, and that is of course for you to give my channel a quick subscribe. And as your reward for doing that, I'd like to present to you a photo of my cat. Aww. Or a cat that I found on the internet, at least. All right, enough of the fun and games. Let's get this thing started. Insert intro here. So you're finally ready to buy your first home here in the Mitten, or so you think at least. That's gonna bring us to the very first step, determining whether you are ready to buy a home. Home ownership can be more expensive than renting, since you're ultimately responsible for added costs like home repairs,
utility costs, garbage pickup, lawn maintenance, snow removal, water, and electricity.
You'll also need to pay for taxes and insurance related to your home. These costs add up quickly, and if you're not financially prepared, you could end up in a bad position.
What, like the back of a Volkswagen?
Especially if you only have one income. In addition to establishing an emergency fund, consider getting out of debt, or at least reducing your debt before applying for a mortgage. While having debt is not a deal breaker, lenders will use your debt to income ratio, which shows how much of your income goes towards debt repayment each month. This ratio helps lenders determine how much mortgage you can handle mathematically. And here's a little tip for you. If you're not sure you can afford a home, try sticking to a budget with what you expect your home payment will be and put that extra money in your savings account. This can build your confidence and your saving strategy so that you can move forward with that home purchase. While you may be under pressure from friends or family to buy a home, it might make sense financially to wait until you're truly ready. The next step in the home buying process is going to be start shopping for a loan. Most people obviously need a loan to make a home purchase, and you'll almost certainly want to get pre-approved before shopping for that home. Your pre-approval can provide you with an idea of how much you can afford. In speaking to a mortgage professional, you'll also get an even better understanding of whether you are in fact ready to buy your first home. If you want more options, consider using a mortgage broker. With a mortgage broker, you have access to several different loan companies and programs which can help you find the best rates. However, your small local bank or credit union may also have options that will save you money as well. If you're in the need of a referral for a top-notch mortgage professional, drop me a line in the comments below and I can give you some of the best in the industry. As a first-time buyer here in Michigan, you may also qualify for state programs, tax breaks, and federally backed loans that can assist you with your down payment. A common misconception amongst first-time home buyers is that you still need 20% down to buy a home, and that simply just isn't the case any longer. In fact, some conventional loans only require 3% down. While speaking to a mortgage professional, they will also help you with the next couple of steps, beginning with finding the best payment options and loan types. When it comes to your mortgage, you may be surprised at the different loan types and payment options available. Looking at terms like private mortgage insurance or PMI can become overwhelming, but a little research can help you move forward. Some buyers choose a 15 or 20-year loan because the term is shorter and they might be able to lock in a low rate. On the other hand, one reason 30-year loans are so popular is that a longer term usually means a lower monthly payment. In this case, you might have a slightly higher interest rate, but the payments are usually more manageable. Almost all first-time buyers here in Michigan go with the 30-year option. And then we've got the adjustable rate versus fixed rate mortgage. With an adjustable rate mortgage, or ARM, you can expect to see the interest rate vary over time. The initial rate is lower, but you run the risk of seeing the rate rise as market conditions change, and that means a higher monthly payment. On the other hand, a fixed rate mortgage remains the same no matter what is happening with the economy or the market. This provides stability in your monthly payment and can make it easier to plan. However, you run the risk of missing out if rates fall. But if they do, it might be possible to refinance to a lower rate anyways and capture the savings. Next up, having your down payment ready. Your down payment can reduce what you owe and also reduce your cost. Realize though that if you put down less than 20% of the cost of your home, you could end up paying private mortgage insurance, which we mentioned a few minutes ago. While you don't need 20% down to be successful in home ownership, it might be a good idea to consider the cost of PMI when you buy. And if you guys stick around to the end, I'm gonna share with you a couple of programs that are available which could mean $10,000 more in your pocket after closing on your home. But remember, we want to be honest about what we can afford. You'll also need to determine how much home you can really afford. One good rule of thumb is to keep your mortgage along with your taxes and insurance between 25 and 30% of your income. Other experts advise that your home costs no more than 2.5 times your annual salary. One thing to keep in mind is that your property taxes will almost certainly increase after purchasing a home here in Michigan. If you spend too much on your mortgage, you might not be able to meet your daily obligations, let alone save for retirement. A smaller house might be worth the peace of mind. If you are carrying debt, credit card or student loan debt, a smaller home payment may be a great idea. And finally, we're getting to the good part, finding a great real estate agent. Once you have determined how much you can really spend and are pre-approved for a mortgage, it's time to find a good real estate agent. This is one of the most important steps when preparing to buy a home. And I've got incredible news for you. If you are looking to buy a home here in Metro Detroit, you've already found him. It's me! Your agent should support you at every step of your home buying process while carefully considering your wants and your needs. They will be your go-to person for advice, recommendations, and explanations of the market to help you find a home that suits your needs and that you can afford. Once you make an offer, your real estate agent should work to negotiate terms that you are happy with. They will also guide you through the paperwork and the process needed to close successfully. Great news! Your offer was accepted. Now it's time to request a home inspection. Once you've found a home for you, make sure to get a thorough home inspection. When you do so, the home inspector will look for hidden problems with the home before you purchase it. Your realtor will typically have referral partners of trusted inspectors that they have used in the past. If you're ever in need of a home inspector here in Metro Detroit, let me know and I can get you some of the best. Through the home inspection, you can learn about any issues that may prevent you from buying the home. These may include mold, termites, foundation problems, or a roof that needs to be replaced, which are all pretty common issues here in Michigan. The inspection can save you thousands in repairs later on. You may be able to negotiate a lower price if you know that the home needs major repairs. In many cases, the results of a home inspection can be grounds for pulling out of a deal without losing your earnest money. But what in the heck is earnest money? Well, let's go to the official Merriam-Webster dictionary to find out. Earnest money, a noun whose legal definition is money used as earnest. So, who's earnest, you ask? You know what I mean, Vern? Nah, well actually I don't, so let's go back to our friend the dictionary. Earnest, a noun whose legal definition is something of value given by a buyer to a seller to bind a bargain. So now let's break that all down for you. Earnest money is a good faith deposit. It's the sum of money that you put down to demonstrate your seriousness about buying a home. In most cases, earnest money acts as a deposit on the property that you're looking to buy. You deliver the amount when signing the purchase agreement or the sales contract. Once you have bid on your home and the offer is accepted, you will go into escrow. During this step, an escrow holder will make sure that all the documents, money, and other necessary information are properly prepared before you close. Escrow is set up to protect the buyer, the seller, and the lender. It can take time to complete escrow, depending on a number of factors. It's not uncommon for a closing date to be 3 to 5 weeks in the future. During escrow, your lender will work on obtaining your final mortgage approval, which will require you to submit a plethora of documents. But remember, at the end of all this work, you will be the owner of a brand new home. While obtaining your mortgage approval, your lender will order an appraisal of the home to ensure that the home is worth the amount that you have offered to purchase it for. If said appraisal comes in below the offer price, this opens up another round of negotiations between you and the seller. Once you've got all of that out of the way, it's about time to close and move in. When the closing date arrives, you show up and sign the final papers. When this happens, the escrow agent will release the funds to all appropriate parties. Once you've closed on your home, it's time to move in. You can paint, unpack, and enjoy your new home. But be sure that you change your address with your bank and your other accounts. You can set up your utilities and cancel your old ones as well. That will save you time and money because you're gonna avoid late fees that way. Some companies such as Xfinity will even waive installation fees if you transfer your old account to your new address. But remember how I told you that if you stuck around until the end of this video here, I'd talk to you about a couple of programs here in Michigan that may be able to put up to $10,000 in your pocket at the closing table? Well, here it is. The MISHDA MI Home Loan Mortgage is a product available from select lenders specifically designed for first-time home buyers who meet certain criteria. 2 products are currently offered as part of the mortgage. The first of which provides up to $7,500 in down payment assistance statewide. But here's where it gets even better. In 236 Michigan zip codes, there is a $10,000 down payment assistance option. As part of this loan program, you will need to take a housing education class, but don't you worry, I've been through it myself and it's nothing to sweat about. In addition to the MI Home Loan Mortgage, there are other loan programs available that will also provide down payment assistance. If this is something that's piqued your interest, drop me a comment below and I'll connect you with a mortgage professional who can help. Well, here we are, pretty deep into this video, and you've probably all got better things to do, so let's move on to the final step, which is, of course, to give me a call today at 947-414-0378. Well, if you're looking to buy or sell a home in Metro Detroit, that is. And yeah, I know it's a super strange area code, but I swear that I'm right here in the heart of Oakland County. Oh yeah, and one last thing. Thank you guys so much for supporting my video. I couldn't do it without all of your lovely faces. If you like what you saw, it would mean the world to me if you showed me some love and liked, commented, and subscribed to my channel. I'll see y'all next time. Bye!